Hello and welcome to another update video about DOT. DOT is currently showing a bit of a reaction there to micro support here, or to the support actually on the daily time frame. Is it enough to say a low has formed? We are going to take a look at that on the smaller time frame. Quick reminder that I see the move to the upside as a possible wave 2 primarily. That is actually wave C of 2 in this rally that started down here in October, A, B, C. And the move to the upside is probably not finished, so could still extend a little bit more. And we're currently in a wave 4 correction. It was quite deep, but is holding support at the moment. As long as the price can avoid a sustained break below 571, further upside is definitely still an expectation. However, it's not a great chart, as I said, long term. I mean, it just isn't. It's I think these boxes can always provide an interesting reward to risk ratio, but I would not trust this chart beyond, I wouldn't trust this chart at all anyway. Okay. Why? Because we only have a 3-wave move up and a 5-wave move down from the all-time high. That's very important to understand. Now we do have a 5-wave move up here from the October low 23. So we do see some mixed signals, but exactly because of that, because we saw a possible 5-wave move up from that low, we also said, okay, it is likely that the market will form a rally from the August low as well, right? 5 waves typically lead to another 5-wave move into the same direction. But overall, based on the overall chart, I see it only as a corrective rally. We'll see. A local low could be, could form in this current price region because we're now deep in support. I think it's a bit early to confirm that, but we take a look at that. Structure here right now, yeah. So let's take a look. Take a look at if microstructures suggest that a low could have formed already. Now, what is needed? So first of all, you see here on the micro level that the price is in a corrective channel. You can see that an ABC structure to the downside is unfolding. And you can see that the 5th wave to the downside might still happen. We are currently in micro resistance. And why is micro resistance so important? It's between $7.13 and $7.50, because a break above it would be an early indication that some kind of a low is in place. Okay, so we've seen so far a rally from the intraday low, which is, let's say, somewhat noteworthy, but not enough to lead to a break above resistance. That is what I would like to see next. Until then, another low is possible, not absolutely needed. The move down is currently in 3 waves, which is corrective. For an ABC structure, the C wave should form another low. So it's between 577 and 660. And then the 5th wave down can still happen. But above 750, that would become less likely. So a low could already be in because we're quite deep in support. And if it's a so-called WXY structure, then we don't need that last low. Also looking at Fibonacci extensions and downside targets, in addition to standard support, you can see the market reacted to the 1-to-1 ratio. That's the 100% extension. It's pointing to $6.13. So, yeah, so that's what we're looking at here. We're looking at a 4th wave to the upside, and this 4th wave could extend a little higher. And then at some point, if it goes above resistance, it becomes more likely that the low is already in. That's why we provide key support. It's important to understand that as long as that is holding and we don't get a sustained break below support, the overall upside expectation for possibly one more high on this kind of murky chart overall is still relevant or valid. Any break below support, as long as it's not sustained, the market can still recover. And on the shorter time frame, the signals that tell us that a low is in would be a break above initial resistance on the micro level, a break above the trend channel, and in any pullback now, a higher low. That's what I'm watching for now. Certainly on some charts, it looks as if some kind of a low has been established, but as long as we are below resistance, it's a bit too early to confirm that, right? So that will be key on the weekend to see if the market can break above resistance. The 50% retracement is quite important because it is the, let's say, the level above which a downside impulse within wave C becomes far less likely could then still be a diagonal, which is why I always want to see also a higher low form and a break above the trend channel. So overall, yeah, I don't think the overall expectations have changed on this chart. But I also definitely don't want to see more than one more low, or the overall chart expectation has to change. That's the expectation and analysis of DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.